Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you joined us for the Clean Energy Metals Investor Conference. Our first presentation of the conference is from Lake Resources. Please note you may submit questions for the presenter in the box to the left of the slides, and you can view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome David Dixon. He's the Managing Director and Chief Executive Officer of Lake Resources, which trades on the OTCQB venture market under the symbol LLKKF and on the ASX under the symbol LKE. Welcome, David.
Thank you, John, and good morning to everyone. As John said, I'm Managing Director and Chief Executive Officer of Lake Resources. For those of you familiar with the company, I joined the company back in September of 2022, and I was invited by the board to come into the company to take us to the next step, and that is to essentially develop a mine and chemical project in Argentina to support the lithium sector. A little bit on Lake. For those of you not familiar with the story, Lake is a junior startup miner founded back in 2016, and it was all really around the whole lithium sector. And so in the early stages, the company was able to find some properties in the province of Catamarca in Argentina, and over a number of years have been doing some exploration and evaluation work to determine the size of the resource and the quality of the asset. And since that came on board, we've been more focused on now how to develop the asset. What I'm going to talk about today really is around our Cachi project, which is in Catamarca, the province of Catamarca. That is a project where we're looking to produce 25,000 tons of lithium carbonate to 99 or over 99.5% purity per annum. The slide, the presentation I have that I'll go through today is available on our website. This presentation was released to the market back in the 4th of August and really was driven from the fact that we were updating our definitive feasibility study with the original feasibility study issued back in December of 2023. So as I move on to why did we update the DFS? Well, from the point of issuing the original DFS back in 2023, a number of things has happened. One, as we continue to do further exploration, evaluation work, and evaluation of the reservoir, our brine grades improved by circa 25%. So original DFS was based on 205 milligrams per liter, and the updated DFS has close to 250 milligrams per liter. So 25% improvement, which has an impact on both CapEx and OpEx. The other thing that happened is that our technology, our DLE technology provider, which is a company called Lilac, based out of Oakland in California, have continued to do further development work, not just with Lake Resources, but with other companies. And back in June of 2024, issued a white paper on the improvements of the technology. And the improvements are enhanced recovery of the lithium from the brine and better performance of the medium, which is the ceramic beads, which attracts the lithium ion and further enhancing the efficiency of the technology. Other important things to highlight. One is we also updated our ore reserve on the same day back on 4th of August. This is a large reservoir, so 25,000 tons. The data clearly highlights that this could be expanded more than 25,000 tons, but today we are really focusing on the first 25,000 ton project. Other things is from looking at drilling and construction efficiencies, reduced number of wells, and then lastly, a big challenge for this project is how you supply power to that part of the province of Catamarca. And over this past year, we've been working with a power transmission company in Argentina called YPF Luz. YPF Luz is a subsidiary of YPF, which is the National Oil and Gas Company of Argentina. So that work was completed to demonstrate that we have a technical solution of providing power to that part of Catamarca. So moving on, so as we look at what is the impact? So the main impact is that we've had improved CapEx and improved OpEx. So firstly, talking about the CapEx. So originally, our CapEx was just under $1.4 billion for 25,000 tons. As I said, this was done back in December 2023. So clearly, since then, we've had some inflationary increases. And you can see on this chart that equates to roughly $46 million. So that gives us a new combined of more than $1.4 billion. But with the enhanced improvement on the lithium grade, with the improvement on the technology and some other efficiencies, we've been able to shave $266 million over that. So our now new updated CapEx is roughly $1.16 billion. Now, I'll remind everyone that this is based on lithium content of roughly 250 milligrams per liter. And subsequently to that, we've had further improvements in the hydrogeology analysis that would indicate our brines are now more closer to 270 milligrams per liter. So there will be further optimizations in both CapEx and OpEx. But at this stage, the number I'm talking about today is based on 250 milligrams per liter. So I'd highlight in this chart again at the bottom, one of the optimizations is a significant reduction in the number of wells that we have to drill, both for production and injection. And you can see in that table as well, as if we go to improve further lithium content, is that there's further savings or a reduction in the number of wells. I will highlight that out of the 266 million savings, nearly 100 million of that comes from the improvements on the DLE. So, congratulations to Lilac on the work that they have done over this past few years, not just with the big resources, but with a number of other entities. And Lilac today are working on a number of other pilot projects. So a lot of confidence being gained with regards to the CapEx. If we look at a little bit on the technology, I just want to highlight a couple of things here. One, with the improvement on technology, is that our recovery has grown from 80% to 90%. So this is the amount of lithium that we are recovering from the brine. The other important highlight here is on the cycle life. So as we'll talk about the small beads that is attracting the lithium ion through the ion exchange process, is through the development of the technology and the improvement on the material, is that the life cycle of these particular beads has nearly doubled, and that provides a significant saving in both CapEx and a lot in regards to OpEx. So again, it demonstrates that whilst this technology is still in its early stages, is that over the last few years, is that we've seen significant savings and significant improvements. Lastly, I will touch on is that ion exchange and DLE technology does provide a lot of environmental benefits. Again, we see it with reduction in the consumption of water, for example, which is also a very important commodity in Argentina today. Not too much to add on the construction side. We are still roughly the same time frame from a final investment decision to achieving first lithium. So looking at a program of about 33 months, and then looking at 48 months to get completion of the complete project, but nothing really new there from the original DFS. On the OpEx, savings not as great as what we've seen in the CapEx, and that's driven by one thing, and that is power. And so as we look at the breakdown of our OpEx, we're looking at 55% of our cost is really coming from power, and I'll explain that a little bit more in the next couple of slides. In a typical chemical project, I would be looking for this to be more about 25 to 35%, but today we're at 55%, and that's driven by a number of reasons. But more importantly was that we demonstrated over this last year or so, we do have a technical solution of getting power to this part of Catamarca, and that solution is extending the power and the grid through a couple of provinces in Argentina. Again, I'll touch on that in the next couple of slides. I would highlight that as we've gone through the OPEX, and what you can see here, there's a waterfall at the top end of this slide, breaking it down into the various components of OPEX. But if you look at the table below and you look at these vertical columns, what you can see is the difference between what we class as non-utilities and utilities. So everything which is not power, i.e. non-utilities, which is predominantly the DLE activities, we're actually seeing a close to 30% saving in our OPEX. Unfortunately, because of the technical solution we have today for the power, we actually have over 30% growth. So net, we've got about a 3% reduction in our OPEX. When we look at that, we see this as an opportunity by able to reduce our OPEX by finding ways to enhance the power solution. But what this highlights is that from the OPEX side, a big saving with regards to the actual DLE activities. I touched on that power is our biggest challenge. So firstly, the good news is that based on the improvements, we have shaved, we've gone from 82 megawatts down to 57 megawatts, a saving of 25 megawatts on the power side. So in itself, great news. The challenge with the cost of the power is that to extend the grid, we have to extend over quite a large area. Now, there's a map on the right-hand side here, and the extension is of two phases. So firstly, on the north side, you can see this red line, and that's the first phase of the extension. That first phase is being developed by YPF Lewis and their partners, and you can see on this map a number of existing or planned lithium projects that will look to take power from that extension. So as part of our power purchase agreement, we're assuming that we're going to take a share of that cost taken into the OPEX. Where we have the challenges are on the blue line, which is the second phase to the extension, which is south, is the line that goes from Humbramerto in the south of Salta all the way into catching Catamarca. And for the purposes of our DFS today, we have assumed is that we would take the full cost of that line under a power purchase agreement. So we can question ourselves whether we're being conservative, because we also know that in that part of Catamarca, there are other projects that are early stage of development that are just in the early drilling stages. So over the next 20 to 25 years, you would anticipate more lithium projects to be developed in that part of Catamarca. This map only highlights lithium projects, but as you know, in Argentina today, there is a ramp up in activity, particularly with regards to copper and silver and gold and other commodities. So over a period of time, we would hope that we would see our power costs come down based on a broader share of the cost of extending this grid. Taking it into the financials, I just want to highlight that in Argentina, over the last year or so, there's been a significant improvement and a significant increase in the attraction of foreign investment, really led by the change in government with President Milei coming in December of 2023. In August of 2024, he introduced the RIGI bill. And so that was all about reducing corporation tax, reducing duties, and also allowing the movement of foreign currencies. As a result of that, we have seen in the lithium space, two main big projects, one Rio Tinto, Rincon, and Gallon, each received their RIGI approval. So not only has the country demonstrated of putting this bill in place, but has also demonstrated that they're really getting behind it, and with the approval of these RIGI agreements with two lithium companies. We also see in the market there's been RIGI approvals for foreign investment in other projects outside of lithium. So I think we can safely say as the government really is getting behind these projects to encourage foreign investment into Argentina today. A little bit in the market, this is from Benchmark Minerals, forecasting a significant deficit moving into 2030. That is very similar to what everyone is forecasting. Now, what we see on this is that the forecast and demand has stayed consistent. The big question today is, are these supply projects coming online, since the market has been in a suppressed environment now for over a year. So this is going to dictate when we expect to see this deficit. Now, some other research analysts are now forecasting the deficit to come ahead of 2030. Now, for us, why is this important? Well, when you look at our project of nearly 3 years to get from a final investment decision to first lithium, to meet 2030, this means this project needs to move into a final investment decision at the end of 2026 or in early 2027. So we're not that far away. As a result of that, our economics, we run our economics based on an average lithium price in the long term of $20,500 a ton. Lithium pricing today is somewhere around about $10,000 a ton. So it just gives you kind of where we think this market is. This is taken from Benchmark. Again, a number of entities have got similar long-term projections. As a result, financials, NPV, 1.5 billion, looking at an IR of 22.5%. A lot of people do ask me the question, well, what is your break even? What is your incentive price? And those numbers are obviously subject to forms of financing and things like that. But we believe that our incentive pricing for us is somewhere north of $15,000 a ton, which isn't that far away from where lithium pricing is today. And if you follow lithium pricing, you'll have seen how sensitive it's been just over the last few weeks, mainly driven by the fact that there's a very small gap today from what the oversupply is in the marketplace. So there's a lot of sensitivity on the lithium price, and I think we'll see more of that over this next 6, 12, 18 months. So looking at the asset itself, we have now completed the exploration and evaluation work. We're at over 11.1 million tons of LCA. 8.2 of that is measured and indicated. So a couple of things here. One is it is one of the largest lithium deposits in Argentina today. It's one of and certainly in the top 5 sized lithium projects in Argentina. And when you look at 25,000 tons a year, you can clearly see from this is that we have an abundance of lithium content. So certainly getting to 25,000 ton is not a problem. And when you look at the actual ore reserve, you can see that we have more than, more than enough than what we need. In fact, when you look at it, we're pulling less than 10% of the existing salar to achieve 25,000 tons. Again, here you can see on this slide that our more recent hydrogeology work is indicating our lithium content to be closer to the 270 milligrams per liter versus back to where we were at DFS, which was 205 milligrams a liter. So as we continue to do further hydrogeology work, we're seeing an improvement in the quality of the brine. Things ahead of us. One is getting approval of the environmental impact assessment. This was submitted to the province. This is approved by the province back in March of 2024. We were hoping to have this completed by middle of 2025. We haven't achieved that, but we have made significant progress. And so looking to get this complete by the year end. Not a lot of work now being done on our side. It's more work being done by the government to complete the approvals. Once this is done, then this project will be what we call shovel ready. So the last remaining items is then to go and find offtake partners, investors, and then raise finance. I will highlight on the finance side, we are still looking at a structure of 30 to 70 equity to debt. On the 70% debt, we have made a lot of great progress with two ECAs, that's the UK and Canada. We're also in dialogue with some other ECAs. So from the debt side, we're fairly well progressed. However, the next step really is to find offtakes and ultimately equity investors to take this project to the next step. The other thing that we're working on for the next year is we're also going to look at focusing on the power side. We see other opportunities to improve on the power and get those costs down. Just under $6,000 a ton OPEX. We're very competitive today, but we also want to focus on reducing the costs further to be even more competitive. Again, we'll work on that from now until a final investment decision, at the same time negotiating a power purchase agreement with the power supplier. Lastly, just to finish off, balance sheet. So this is now out of date, but at prior, when we issued this presentation, the company was holding cash at end of June of 12.4 million Australian dollars. We did add the proceeds from an ATM of 2.1 million Australian dollars, given as a pro forma of 14.5 million dollars at the end of June, again in Australia dollars. Subsequent to this, the company completed a capital raise last week, adding a further $12 million to the balance sheet, and we also have further proceeds from ATM of another roughly $2 million. So net pro forma for end of June, company's cash position is circa 28 million Aussie dollars with zero debt. So today we feel we've got a fairly strong balance sheet that allows us to continue through the next stages of the project and hopefully moving into a final investment decision sometime in later of 2026. So with that, that's what I have for today. This is the team, Lake Resources team. We have gone through significant reductions, obviously, as we manage our cash. But with that, I will close and look forward to taking questions later on and look forward to one-on-ones. So thank you very much.